Today, I thought of discussing the three risks and three opportunities in 2024. And if you ask anyone on the street, do you think living expenses and food prices will be higher in a year or two from now? 9 out of 10 will likely say yes. This means that inflation is still a concern, and that's risk number one, which is a U-turn in inflation. And risk number two, it could be an expansion in the geopolitical tension. And risk number three, with a slower growth projected, as what Jerome Powell mentioned in his latest FOMC conference, a delayed recession may happen in 2024. But with three risks, potential risks, it comes with three opportunities. And what are they? My name is Kon Hao. My work in this channel, as always, is to study behavior science in finance, discover correlation between the markets, and uncover potential opportunities. And please do take some time to read into the disclaimer before we discuss further. And with these three risks, it brings potential volatility in the market. So therefore, the US market with volatility is to trade into them. And later on, we're going to discuss about Asia market and how about the commodities market. So again, with this year, a potential risk, and either one of them or two of them or all of them is going to create volatility in the market. And it all started at the beginning of 2022. And that's what I've projected since the third week of 2022. My projection for the US market is to trade them with volatility, and that's what we're seeing for the whole year of 2022 was down and the whole year of 2023 was up. And I believe with all this potential risks, there will be headwind. I do not subscribe to the ideas that the US market will continue its run. So what happened that the market kind of priced into this run for 2023? So there will be some headwinds. It may not be a bad news if you are traders. So in short, traders, we welcome volatility, but not for passive long-term investors. So therefore, it is just a shift of the mindset. Now let's cross over to look at opportunity number two, which is the Asia market, is that when US market is in headwinds, the whole world will kind of suffer. But I believe that Asia market will be at a better position is to accumulate them. Why is it so? Because most of the Asian market that we are seeing here is the starting point is at its low point. And that's what we're seeing here is the China market, which is the largest among the Asian market, one of the largest, I would say. And at a low point, the other attributes for Asian market is that most of them are dividend stocks. When I say accumulate them, it means that I do not have exactly an idea where's the main direction, but on any perspective of a hard landing, where I believe that Asian market should be well cushioned. And that brings me to the next point here is that how about the commodities market? And this is the gold market is to buy them, is to buy into them. Now let's look at what happened here to this chart that we're seeing here. And what we're analyzing is the quarterly chart that we could see that over the last many quarters, the goal has been attempt to break above 2000, but it failed each time. And which year was this? That was July 2020. It tried to break above 2000, but it failed. And on this year, it tried again. That was in January 2022. It tried to break above 2000. It failed. And on this year, last year in April 2023, it tried again. It failed. But towards the end of the year 2023, it closed with a strong mandate. And for the first time in the history of gold, it closed above 2000. So it is sending to us a very clear mandate where will be the direction for gold in many quarters to come. So when we study into behavior science in the price movement, this is what we believe, because we believe that the price is telling us a lot of story, a lot of depths where it is heading. So in short, for the goal is that my strategy is to buy into dips in many quarters to come. And something about gold is this. I believe that gold is the leader of most commodities market. So as long as the gold remain high because my mandate since 2022 is to buy into commodities, and it still hold until today, until this year. And especially gold, I took a lot of comfort in gold. It's giving me a very clear mandate. The rest, I believe, was subsequently picked up along the timeline. So since we have this idea about the gold market, my whole idea is to buy into dips. Let me just zoom into the trading strategy for gold in 2024. And what I'm intend to do is that the whole quarters that earlier we're discussing about quarters, what I intend to do is that I'm going to buy on dips. And just to give you some idea what I'm looking at here is that I'm going to connect all this point. And I believe that this will be the retracement that I'm looking at. And this is what I'm going to do. So on the retracement in the next quarter, which is from January to March, this is my plan. Buy into retracement somewhere around here. We just got to keep track of it. Where I believe in time to come, gold will continue to move up from here. And earlier we discussed the three risks: inflation, geopolitical tension, and recession. Geopolitical tension may lead to inflation, but can inflation and recession happen at the same time? And that will be the topic for another time. But when inflation and recession collide, it creates volatility. And that makes sense to trade the US market, to accumulate assets in Asia, and to invest in commodities. Stay tuned for my coming tutorial, and remember to subscribe to my channel. The market are always telling us on the next move. Join us in our weekly case study and discussion. Click on my profile icon to find out more. Feel free to leave any comments below. I love to exchange ideas with you. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.